Hello, today is the 13th of November 2011. This video will be looking at volume weighted average prices, also known as VWAP, and the running average. And a volume weighted average price is another running average, but it looks at the volume. So I'm going to explain it now before I get into it. We'll use a quick example using very tiny numbers. Let's assume over one period you have a price of 10 and the volume is 10. You add up the total volume, and well, 10 plus 0 is 10. The total volume and price, which is these two numbers multiplied each other, 10 times 10 is 100, and you divide these two numbers to get the volume average weighted price. So in the second series, say the price goes down to 8, but the volume goes up to 25. 25 times 8 is 200. And we add the previous number of 100 to get 300. We take the 25 volume, we add the 10, we get 35. So 300 divided by 35 is 8.57. And then assume on the next one, it's a $9 price, the volume is at 15. 9 times 15 would be 135. So 135 plus 300 is 300, and then you'd have the price. So that's pretty much how volume weighted average price works out. So let's get started. We're going to look at the Dow Jones. We're going to follow it up with the NASDAQ and gold and silver. So the chart goes back to 1994. There isn't any dates on the bottom of the screen, but this was a 2000 top. This was the 2007 top, the 2009 bottom, and so on. The blue line represents the volume weighted average price since the 2000 top. The red line since the 07 top, and then the green line since the 09 bottom. Therefore, we'll start with the blue line, and when it was in the downtrend, we can see the resistance finally changed along this level here because it didn't sell off, rather it went higher and found support, and then finally went much, much lower. I've talked a lot about the Dow Jones and a failed move, which is guaranteed, and this chart also shows the exact same thing that the Fibonacci retracement also shows, because when it managed to break above this level, it had a decently tiny gain, and I really mean tiny because it broke this resistance and had one leg higher. That's tiny. Then it comes back and it didn't find support at this level, so as it's going lower, you might say to yourself, hey, wait a second, was this move in here a failure? Because, well, it went above it, but it didn't hold. And then it went up and found resistance at this level, stabilized for quite some time, has lifted higher and found support. So now is this big move the selling? Or again, is this breakout above the volume weighted average price the failure? There can be so many failures within these charts. So you're going to go from failure, 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 failure until you finally have the move that is necessary, or however you want to put it. The volume weighted average price since this top in here, again, showing the failure possibility of this down move because it, just like the blue line, found resistance at the exact same spot and has currently found support at that exact same level. Now, my overall prediction is the stock market in itself is going to collapse, but that doesn't mean anything within this Dow price because the system of how stock markets are traded and the fraudulent systems is what I consider to be that of a collapsing situation. For example, if you're thinking that we're going to be in a hyperinflationary scenario, then shouldn't stocks go up as well if everything else is going up in price? That's just a thought of mine. Now let's move this over to the NASDAQ. And the NASDAQ had a much bigger top in 2000. In fact, it still has not managed to make it back up to that level. So the blue line represents the VWAP from that point. And the red line, same thing, 2007 high, 2009 bottom. Really, you're getting the exact same type of look here because what's happened, again, is it's found support at this area. Now, the only difference is the Dow Jones found support at both the blue and red lines, or from the 2000 and 2007 highs, while the 2009 bottom was lower. This is the complete opposite. It found support here at the 2009 bottom VWAP, and not quite at this level here. This line chart is a swing line chart. And that means that pretty much 99.5% of the time, if not greater, It's always going to find the lowest price and a highest price on a particular level, which is why I like this. So for example, this top was exactly the top. It's not as if it closed, or it was at this point one day and closed lower. No, it finds the highest and lowest prices automatically. Okay, so then again, the NASDAQ's about the same. So let's now just go on to the gold chart. And this is not a volume weighted average. This is a running average instead. The dates are the exact same, and that's why it's not on here from the 1990s to now. But again, the volume weighted average price since the low set at the end of the 1990s, or the running average, excuse me, is well above the price. Same thing with the running average from in here. And if we did a running average from here, it's barely even shown any move of going lower. Overall, the big trend for this is not within any type of weighted average, but the trend lines in itself. There's this trend line, and then you got trend lines like this nature in here, and it's in a great uptrend. If you're trying to short a market like this, where you see averages like this, then that's another way of saying that you're trying to fight the trend, or yeah, fight the trend. Good luck on that, baby. Okay, now let's move this on to silver now. Same thing, same time frame, same volume weighted average price. Well, we have an extra one in silver because it made this significant top and bottom in here. So therefore, within silver, since it's made this or running average from 2001, 2002, it once found support in 2008. It's lifted higher since then. The green line, which just like the stock market, when the market fell lower, it found resistance but managed to go higher, showing that the selling that occurred in 2008 to be that of a failure. Now, as far as the running prices from the 2008 highs and lows, the price action is significantly still above it. Yes, we've been down to this 26 handle, but we see that it's between 21, 22 or so where these running average, or back to previous resistance. Now there's a big difference between running average and volume weighted average prices, because I don't have the volume on the silver market. Instead, I'm just going with running prices, and the volume is different. For example, if you look at the top in here and you look at the SLV volume, you'll see that it was much greater during this time frame as the market topped, where the COMEX itself had greater volume afterwards. Two different levels of volume, two different paper markets, basically. So now let's take a look at SLV. We're not going to go for just as much time. We're basically going to start the chart in here. And we'll now use VWAPs instead of running average prices. And this is what we got. Now, first of all, I said 99.5% of the time it's going to pick the highest and lowest price. And, well, this is one of the 0.5% of the times where it doesn't find the highest price in here. But once again, very close enough. And that's because the market got up to its high, which was 21.35 on the silver COMEX price, not the ETF. And it literally just plummeted after that point. Thus, the computer states that the level was in a downtrend. It did not take the high price, but then again, that doesn't mean much anyway. Let's now go over the VWAP. And the VWAP, again, we have the exact same thing from the 2009 or 2008 lows, excuse me, and the 2008 highs. But within the VWAP, the $26 bottom was found a support within those two levels, where the running averages didn't, and that mainly shows the big difference within the two of them. I have this green line, which is now the volume weighted average price since the market topped at around $50 per ounce. It did manage to get above this level in here, but it wasn't able to hold. So that's a failed move. Oftentimes when failed moves create fast moves, that's all you pretty much need for a fast move to justify that the trend has done what it's supposed to within technical analysis. Again though, if we break above this line, or when it breaks above, that should be the better way of stating it, and then manages to get above this moving average, starts to roll over and goes higher again, then the market is bullish again. We can see that within, say, this blue line here. And it started to really get going roughly in here because It found resistance. The average is now rising, but still barely. And then the breakout occurred, of course, breaking $20 per ounce. Let's finish this off with GLD. It'll be again from February 2008 to November 11th. We also have volume on that. So let's take a look at that again. Go through the different significant points. Same thing. 2008 high, 2009 bottom. It has not found support on that level since in here. And that was back when gold was under $1,000 an ounce. Basically, the price is about 10 times lower than the price of gold, and more precisely about 10.25 times. But if you see something here like 175, it's about 1,700 and so an ounce. Same thing in here. The volume weighted average prices really don't cut it. The trend line analysis is what really works at the best. And by showing it within this method, I have two lines here. I connected the key lows on the bottom. I have the exact same rate of ascent on the top part. And I connected to the best place that I possibly could, which matched this high. Boom, boom, boom. Close enough here. Tried to break above it here. Found support once, but nope. Now we're back to this line again. The analysis that I use within trendline is you have a range like this. Once you break it to one side or another, then that's where things can get pretty wild. If you break it to the upside, that's where you can have potential parabolic gains. And then you break it to the downside, that's where you can have trend reversals. But again, like I said with the gold the last time, if you are trying to short the market within the chart showing something like this, you're really fighting the trend or trying to stop a bulldozer that's going at full force. Thank you for watching today's video and have yourself a great week. Bye-bye.